Hi, everybody, and welcome to week 3 of Accounting 114. I'm Jeannie Goodwin. I'm your instructor for this course. Thank you guys for joining me today. All right, good. Thank you. So here we are in week 3. We've gone through a lot of the details of what you would see as far as calculations goes for some withholdings, and we're going to go into a little more detail about withholdings today. So I just wanted to cover one quick thing from last week. We had just one thing really that really was confusing or difficult, I guess. I had a lot of people that missed the wage base on Social Security part of well, I know there was a little confusion in some of your quizzes also about Medicare having the wage base, and I apologize, that was a bad question that was put in there. So I've made the suggestion to make the correction for that question. So if you had that question, I apologize. I made a note in your quiz about it and you got points for that because it really was just a bad question. But there is a wage base on Social Security for that 132,900, and that means that if you make more than that dollar amount, that you discontinue paying the Social Security, and that applies to both the employer and the employee. So the wage base in the case of Social Security, whatever the employee is having taken out of his check is going to match what the employer has to pay for taxes as well. They're going to match. The employer and the employee are going to match. So those columns on your last week's assignment should have matched. On the Medicare side, we noticed last week, we talked about this last week in the lecture, that anything over $200,000 of wages gets taxed an additional 0.9%. And I know some of you had that incorrect as well because you forgot that point in front of that 9%. But there is no wage base on Medicare, so that means any amounts that are paid are going to be taxed at this 1.45%, and then anything over the 200,000 has that additional 0.9% added on it as well. So just wanted to note, this is going to come up this week, so this is a good place for me to note it for you guys. Medicare taxes are taken out of your check to help cover things like hospital care, nursing care, and doctor's fees that come up later in life after you retire. So that's why those amounts are being taken out of your check. So you'll have that amount later on. Do you guys have any questions? I think you two that are here didn't have any problems with this on your assignment. So if you have questions, if you're listening to this lecture, please get a hold of me and I can go through that again with you. But I just wanted to touch on that one more time. I'm trying to think if there's the one thing I just want to tell you going forward as far as your homework assignments is when you do your homework, just do a reasonableness check. Before you submit your assignment, take a look at the deductions. I had some people that did the deductions based off of the year-to-date amounts rather than the current earnings. Even though we talked about that, I know that was confusing with them both there. But if you look at it, if you've got a $3,000 check and you're calculating that they're going to take $2,500 out for Social Security, I mean, you think about that. If you had a check where you were supposed to be paid a gross pay of $3,000 and you saw that they had taken $2,500 out of your check for Social Security, I think you would think, obviously, something's wrong. Out of my $3,000, I'm going to end up with just a couple $100 after you take all the deductions out. So just look at it and see if it makes sense. You know, is this reasonable? If I had a check for this amount, that these were the deductions that I would expect to see. And if you're, you know, the numbers are completely out of whack, then there's probably something wrong. And if on the Medicare side of it, even if the amounts go over the 200,000, 0.9% additional is not a whole lot additional amount. So in that whole list of them, the people that did the 9% rather than 0.9, those amounts really should have stood out to you because, you know, you've got $58, $74, $62 and going along, and then like, you know, $240 and then back to $40 and $60. So just take a look at it and see, you know, big picture wise, does this all make sense before you submit? And these are all of the things that you really have to pay attention to when you're doing payroll. There's a ton of detail Oh, the extra, Michelle, you're talking about the extra, the year to date over 200,000? Okay, yeah, that it's anything over the 200,000 gets additional 0.9% only on the employee side. So there are going to be differences between the employee and the employer side for Medicare side because of that 0.9%. But there is a lot of detail that you have to pay attention to, and sometimes it just takes you stepping back and looking at things to make sure that everything looks reasonable. You know, you don't want to, there's a lot of a key punch that people do even with the electronic things now where changes are made or the hours are actually entered into the system, and instead of putting 20 hours, sometimes somebody might enter 200 hours. So if you go back and look at your register and you see this huge amount of salary all of a sudden for this person, wait a minute, I got to go back and take a look at that because obviously there's something gone a little wacky with that. So just take a few minutes before you submit your assignment and look at the overall picture. This week's assignment, it's going to be, that's going to come into play very prominently with checking for reasonableness. So we'll talk about that here in a few minutes. All right, so this week 3 topics. We're going to talk about withholding this week, a little bit more about withholding. We're going to talk about deductions. We're going to talk about outsourcing and then about confidentiality. So those are the main topics. We're going to focus on the first 2 more than the second 2, but we will go over those obviously in the set of 4. So the first topic, talk about withholding. This is going to be where the main focus is for your assignment today. And I do want to spend a good amount of time going over your homework assignment because there's a lot of detail in there. So I'm thinking that we'll cover this topic and then we're going to go through the assignment or the example that's like your assignment right away after we go through this percentage and wage bracket, because I want you guys to get, I'm not sure how long it's going to take us to get through it all. So I want to make sure we have the time to get through it before we continue on with everything else. So the 3 areas we're going to talk about are what forms are required and then percentages and wage brackets. So let's go ahead and get into that detail. So first thing we want to talk about are what are allowances? Where everybody talks about these allowances, what are allowances? And on your screen you see a lot of different things that affect these allowances that are on your tax return and also on your W-4 that you file with your employer. So a withholding allowance refers to an exemption that reduces how much income tax an employer deducts from an employee's paycheck. So you can see that if you're single, you have a deduction or an allowance for yourself. If you're married with 1 child, you can have a couple more allowances. If you're a single parent with a couple children, or you have lots of kids, or you have other people you're claiming, maybe your parents that you're claiming along with you, or if you have a house that you're deducting, all of these things come into play when you're determining what allowance you're going to claim on your W-4. So this can get confusing for a lot of people, and honestly, this is one of the questions I had most often, I guess, not most often, but pretty often, when people would come in, they would want me to complete their W-4 for them. And I would advise you right up front, any of you that are going to be doing payroll, do not go down that path of people that are having you fill out the W-4. That is not your position, and honestly, not even something that you can recommend to somebody because you don't know the entirety of their situation. So you don't want them coming back to you at a later point saying, you screwed up my taxes because you didn't tell me about XYZ on my allowances. But it's probably something you don't even know about their personal life. So what I always suggested to people is I explained what allowances were, I explained what the W-4 was, and then I recommended that they do some research on it and talk to their tax preparer to find out what they should complete as far as allowances go. You are required as an employer to give them the W-4 for sure. That is a requirement for us to provide the W-4 to the employee. And then you're required to get that signed W-4 back from that employee to input into the system. If you don't have that back in time or at all, I guess, by the first payroll, you have to withhold at the maximum rate for that first payroll or until you get that W-4 back. So Someone who's maybe got 3 or 4 allowances are going to see that check, and if they haven't turned that W-4 in, are going to all of a sudden realize that they better get that in quickly, because there are things that are, you know, the deductions that are coming out are going to be a lot higher because you're withholding at the maximum rate. So there's lots of things that come into play as far as what you use for a personal choice for allowances, but from an employer standpoint, you use that W-4 to determine the allowances. Do you guys have any question about allowances? In the next slide, we're going to talk a little more about where to get that information. And this is mainly, this is mainly for you guys, but there's lots of sources out there on the web to help you determine what to put on your W-4. So if you are confused about that, of what to do, I would recommend the same thing to you that I recommend to my employees, is just understand, first of all, what you're putting on that W-4. So the allowances, the way the taxes work is you are taxed a certain amount on your taxable income. And there are several things, without going into a ton of detail with taxes, there are several things that reduce your gross earnings down to your taxable earnings. And then you are taxed on your taxable earnings. So the idea of the allowances is to figure out how many allowances you need to put in there to get your withholding to equal the amount of tax that you're going to pay at the end of the year. So it's pretty challenging to do that. Most people are going to owe some, or they're going to get a little bit of a refund back. The smaller that amount, of course, the better. You want to get as close to the amount that you owe for taxes that you had withheld from your paycheck. People that get these giant refunds at the end of the year are really not doing themselves any favors, because the government holds your money for free for the entire year and then give it to you. So if you increase those, if you decreased your allowances and they took more out at the end of the year, then you're going to have this big refund, and you are going to get that back. And a lot of people use that kind of as a savings plan. But instead, if you had less taken out of your check and have more income coming to you every month, you could put that extra money into a savings account that's earning you interest every month instead. So instead of having the government keep it for free, you can put it into a savings plan that you still have access to throughout the year, but is earning you interest as you go, which then it's putting your money to work a little bit more. And on the same side of that, you don't want to end up in a situation where you owe a lot at the end of the year, because then you start running into interest and having to make estimated payments, and there's a lot that goes into that as well. So the idea is to match those allowances. So the amount of money that's taken out of your check in the year is going to equal the amount that you owe on your income taxes. So that's bottom line. The amount of money that's owed to the government, federal and state government, both of them, you know, this is calculated in both directions, but federal and state government is dependent on your marital status, your taxable income, and your number of allowances you have. Yes, in some cases, Michelle, it does. There are so many pieces, and then last year with the big tax reform that came through, a lot of those things changed, of what is allowable and what are actual credits and what are deductions and how much you can claim. So taxes honestly are not my favorite thing, and everybody assumes since I'm an accountant that's, you know, I am the guru on taxes, but I always try to tell them, you know, accounting is a little bit like being a doctor. Just because I'm a doctor doesn't mean I can do brain surgery necessarily, or I really enjoy doing brain surgery. But it's sort of like that with accounting. There's a lot of accountants that are real tax gurus, and there are ones that aren't. And I've never been a huge fan of taxes. I mean, I've had to deal with it my entire career, of course, because I am an accountant and I've worked for companies where we have to strategize over taxes, but taxes have never been my big favorite thing either. I do taxes through, I have a company that I have on my own that I do taxes for people, but not in a large volume. That's not what I specialize in. So, but anyway, there's a lot to it, and there's people that just really love the tax law, and I love those people, that there are people out there that do that, but it's just, it really is not for everybody. Okay, so one of the things I wanted to point out is the IRS does have a tax withholding estimator. And like I said, there's several of these out there. This is one that you go through and it gives you an idea of what you should put on your W-4. So if you're confused about that, and this would be a good thing to do at any point, just because you filled out your W-4 when you hired in, doesn't mean that that's it and you're stuck with that. You can change your W-4 at any time with your organization to change that withholding. You can change it on a weekly basis if you want. Your payroll people are not going to be happy with you, but that's up to you. So if you need to make a change, then make that change. The more allowances you have on your check, the less that's going to be withheld from your account or from your paycheck. So the less, this might be kind of confusing the way I did these arrows here, but the more allowances you have, they're going to withhold less, because that means when you do your taxes at the end of the year, you've got lots of deductions that are going to come out before you get to that taxable amount. So they're going to withhold more. So if you claim single zero, which is the highest amount of deductions, that is going to be the most that comes out of your check. So then if you claim married zero, they're going to take a little bit less out. But then if you claimed married one, they're going to take a little bit less out. If you claim married six, they're going to take a whole lot less out. So it really is dependent on your personal situation and your assets, and if you're married and if your spouse works and if you have dependent children or parents, all of that stuff comes into play. So this is a very personal decision that people need to make, and really nobody but you and your tax preparer should be the person that makes that decision for you. And don't listen to your payroll provider or your payroll person at work if they're telling you what to put on there, because they don't know, and really they shouldn't be doing that. That's not a wise choice from them either. So make sure you're making your own choices about that. So just wanted to get that point across. All right, here's what a W-4 looks like. If you're working or if you have worked, you've seen this before. But this is how it's completed. So box number 5 there, that shaded amount, is where you put the number of allowances. And then at the top, and I didn't mark it, let me see if I can find my annotator here. The amounts right here, those are also, that's important as far as payroll goes, because that's what you're claiming: single, married, or married but withholding at the single rate. So the employee here, and that's exclamation point down left hand corner, the employee is the person that's responsible for determining the amount that's taken out of their check, and they do that through this W-4. So that's what you need to do. Do you guys have any questions about allowances? All right, I'm going to go ahead and move on. You're going to have a couple questions this week about W-2s, so I wanted to go ahead and include that in here, and this seemed like the perfect spot to go ahead and include that. The W-2 is what you get at the end of the year. I'm sure probably all of you know what a W-2 is, but W-2 is a document that you get at the end of the year from your employer. I'm just reading Amanda's comment. I've always had help filling these out at a job. Glad to learn it for myself. I'm hoping that your employer was not the one that was helping you. It's okay to get help doing this, but just hopefully not your employer, because that's really kind of, it's a libel thing for them as well. It's not a good idea for them to make those kind of recommendations to their employees. So hopefully you just had somebody helping you do that. But anyway, we're talking about the W-2 here. W-2 is a document you get at the end of the year that summarizes your payroll with the company. So here's an example of what a W-2 looks like. They look now in a lot of different forms because a lot of them are electronically filed and filled out. So there's a lot of different formats, but the box numbers and what is included on the W-2 is going to be the same for everybody. So you see box 1, those are all of your wages and tips that are given to you by your organization. And then box 2 is where the employer puts the amount of federal income tax withheld. So that's the amount that they calculated based off of your allowances on your W-4. That was the amount that was taken out of your check. And then box 17 there at the bottom is the state version. of that. So whatever you're claiming for state, and you can claim 2 different things if you'd like. If you want more or less taken out of your check for your state taxes, you can make those adjustments as well. They are can be handled separately for state and federal. So on here, we've got your name, your employer's name, the wages that you've earned, the wages that were subject to Social Security, Medicare wages, and how much was withheld for those as well. And then, retirement plans, if you're part of the company retirement plan, and then some extra instructions that were Box 12 gives a lot of details about different things depending on the states that you live in. And then at the bottom, again, this is the state information, your employer information, how much you made, what was withheld for state purposes. And then box 19 is if you have local taxes as well. So some states withhold local, but this is an example of what a W-2 looks like. And then the employer is responsible for collecting all of these W-2s and summarizing them on what's called a W-3. And then the W-3 is filed with the government as well and matched up with the W-2s that come in from your employees. So hopefully, and if you didn't know this, that is the case. Your employer also files a copy of this W-2 with the IRS and summarizes them in that W-3, but they're all matched together when you file your information as well. So having differences in your W-2s can put a real red flag on your tax return, just so you know. So there are people that think, well, I can just make some changes here, and didn't realize the employer is the other half of that picture that the IRS is getting. So make sure you're using the right information. This week, we're going to talk a little bit about Circular E. I've talked about Circular E in the past, but have some details on your exam today, or your quiz this week. So I wanted to make sure that we cover that. Circular E is published once a year. It's put out a little bit before the tax year starts, so people that are involved in the payroll side of things can get prepared with what the rates are going to be, what the withholding should be, and really there's a ton of information. I've got a copy of that up here if I can find it really quickly for you. Circular E is also called Publication 15, so you'll see that used interchangeably. So this one says this is for use in the current year that we're in right now. But there is really a lot of important things. They highlight some of the things that have changed from the prior year, are things that you really need to pay attention to, what happens with the payroll checks and things like that, suggestions that they have, what to do for electronic filing. This is some ideas for hiring new employees, things to pay attention to. They've got worksheets you can use in here to try to calculate different things that are going to be important to you, reminders about record keeping. There's lots and lots of different things. This was one of my favorite things, is the calendar. So here's what to do during the year. It goes through by some dates in here, and these are some great things to put on the calendar, just so you don't forget. But it reminds you about filing deadlines and information deadlines that you need to make sure that you're hitting. So the calendar is really awesome. And then this is several pages. I'm not going to go through each section of this, but because we're going to use this here in a little bit. Because we're going to use it for the end, because at the end it's got your withholding tables. So we're going to use those today. So it also has the current withholding tables that you're going to use for any of the withholding you do for your employees. So there's a lot of information in this. There's some of the other things that I listed here. It's the definitions of frequently used payroll concepts and terms. So if you're new to payroll, this is going to be like a Bible for you to try to really understand what's going on and how to explain things and how to understand things. And like I said, it's got a federal income tax withholding tables and rules and regulations for filing. It's something that every payroll person needs to sit down and read from cover to cover. It really is, because there's so much information in there, and most of that stuff you're going to use. So it's really great to have that in there. Okay, so let's see. I think I covered everything I needed to cover with Circular E. So let's talk about wage brackets. So there's two different methods that the payroll employees use or payroll systems use to withhold the federal income tax from the person's check. The first one is the wage bracket method, and this is the one that most people are familiar with. So this is using the information from the back of the Circular E, or these brackets are out there on the web if you're so inclined to go look for them. But make sure if you do search the web for them that you're using the right year, because these do change. So it mentions right here under the, let me get my drawer back. It mentions right here what year the wages are for. So make sure that you're following the correct year if you're using this as a guide. There are some great things about this. There are some things that I want you to pay close attention to. There is a bracket for filing status. So if there's single or married filing status, those will be on here as well. And the frequency of pay is on here. And these are all important things you have to pay attention to when you're doing your withholding. So the way that this is used is, first you find your filing status. So if your employee is single, this is the correct wage bracket to use. And then if they're paid weekly, then this is the correct one, because you see it's single persons with weekly payroll. And then on the left, let's see here. On the left here, these are the gross wages. So when you've got your wages that show for the employee, you look them up on this table here, and it shows that it's at least, like the first line, or the one, let's look at the one I have highlighted. It's at least $205, but it's less than $216. So if you had $215 for an employee, it would fall in there. If you have $216, it's going to go down to the next line, because you can see that it's at least $216, but it's less than $227 in the next line. So once you find the correct amount of wages, then let me get this out and we'll move on to the other side. Take that out of there. And then the next part of this is the number of allowances that your employee has. So based off of, now it's a single employee, this case they had one allowance that was written on their W-4. So then you go over along this top of the table to the number of allowances that your employee has claimed on their W-4. And then where those lines intersect, you can see there's an arrow going down and an arrow going over. Where it goes, that highlighted amount that says 6 there, that's the amount that needs to be withheld from that employee's paycheck for that week. So that's how you use those wage brackets. If you can't use the wage bracket, and we'll look at that as one of the examples here, because the taxable wages exceed the amount shown in the last bracket, then you have to use the percentage method. Okay, the percentage method is the alternative method that we use to do our withholding. And I'm going to talk a lot about this wage bracket method, but I just wanted to talk a little about the percentage method, because that's what we're going to do in our homework. Both of those are what we're going to do in the homework today, but a lot of confusion comes around this percentage method, so I wanted to talk about this a little bit. But the employer uses the completed W-4 just like they do for the bracket method. The employer can choose which method they want to as far as withholding goes. There are two main methods, like I mentioned, the wage bracket and the percentage method. Both methods are going to distinguish between whether your employee is married or is single, and they're calculated just a little bit differently. But the choice that companies use can be based off of several things, really. But it a lot of times comes with the amount of employees they have, the dollar amount of their employees, things like that, as to which method that they're going to use to do this. And the employer can change at any time and can use different methods of withholding for different groups of people. So it really is really just dependent on how they set up their system as far as what's going to be pulled from where. Both methods take into account a standard amount that's deducted, and then use the calculations to figure out what the actual withholding should be from from the person's paycheck. So you can see on your screen here, and we're going to walk through this in specifics here in just a minute. But first, you determine the amount of gross wages earned. If the wage ends in a fractional dollar amount, you round the gross pay to the nearest dollar. So that's step one. Step two, you multiply the number of allowances claimed by the amount of one allowance for the appropriate payroll period. And the one allowance method, and I'll show you here in the next slide. On the top here is a snapshot of what comes out of the Circular E, and it shows for the payroll period what was claimed as far as the payroll period. Was it a weekly period, bi-weekly, semi-monthly, monthly, quarterly, semi-annually, or annually? Just wanted to point out, this is often confusing too between bi-weekly and semi-monthly. Weekly obviously means you're paid once a week. Bi-weekly means that you're paid every other week. And then semi-monthly means you're paid twice a month. And that may sound like the same thing, but it's really not. There are some months that end up having an extra week in them. And if you're paid every other week, a lot of times you could get paid 3 times in one month. If you're paid semi-monthly, you get paid on, let's say, the 1st and the 15th, or the 15th and the 30th of every month. So it doesn't matter how the days fall, you get paid twice a month no matter what. So those are a little bit different. And then, like I said, monthly, quarterly, semi-annually. To the right, you can see the withholding for one allowance. So that's what I'm talking about in step 2, where you multiply the number of allowances claimed by the employee, and you multiply that by the number of one allowance for the payroll period. Step 3, you subtract the amount for the allowances to get the excess wages, and we'll go over this in just a second. And then you determine the withholding tax on the excess of wages over the allowance claimed using the percentage method. Okay, so we talked about that table up on the top. The table on the bottom here, it says table 3. This is the semi-monthly payroll period. So in the Circular E, there are lots of different schedules for these. You can see them here. So at the top here, you can see that this is table 1. This is weekly payroll period. And then you look on the left here, it's for a single person. On the right is for a married person. So if you are paid weekly and you are married, this is how your, over on this side, would be how your withholding is calculated based off of the percentage method. If your employer uses a percentage method, this is how they would do the calculation. So you can get the information from here, but I'll show you a little, the way I would recommend is just putting it into an Excel document, and you can pull those specific items that you need to plug in there, and it'll calculate it for you, so you can hopefully make a minimal amount of mistakes here, because it can get confusing. So I'm going to go ahead and just put this percentage method up on the screen. This is an example that I was going to do, but I think I'm just going to wait, because we're going to go through all of these examples in our example for the homework. But I'm just going to put it on the screen. So if you want to stop the video and go through this on your own, that's fine too. So, and then we have a couple videos that I'm going to hold off on for the moment. Okay, so what I want to do is go through this example. The way your template's going to look this week, and again, this is your homework assignment, and I'm going to try to do a template for you as well. This is what your homework is going to look like, this page. And again, this is a picture, so I'm going to try to get this all in Excel for you, so you can use it just as a template, because it's so much easier. And I know you guys don't want to type it all in, so I'm going to type it all in for you, I guess. I'll put it in there for you, but again, I have to get it approved before I get it in the course, but hopefully we can do that today. So from our example wise, we're going to do a similar type homework assignment. And again, this is just an example. These are not your homework numbers that I want you to use. But what we're going to do in the homework this week is we are given, let me just shade the ones that we're given here. You are given the employee's name, what their marital status is, the number of allowances they have, what their gross wages are, and then their pay frequency. And from that, you need to determine the amount to be withheld using the percentage method, and then with the wage bracket method. Okay, so I wanted to go ahead and go through these because it is a little time consuming, and I'm warning you, we are doing 10 of them here. You guys have, I think, 21 employees. 1, 2, 3. Yeah, it looks like about 21 employees. So make sure you give yourself enough time to work through this because it does take a little bit. And you don't want to rush through it because you will make a mistake, I promise you. Okay, so let's go ahead and work through these. So let's work on the percentage method first. I've made some cut and paste here, items from the 2019 Circular E, and I would like you to use these withholding amounts again for your homework assignment is use the current Circular E, which is for wages that were paid in 2019. So that's the one that you see on the screen here are the ones that I would like you to use for your homework assignment. All right, so for the percentage method, I did a little calculation down here that we can use in order to make the calculations. It makes it a lot easier when you put it into a form. So based off of what I just told you, the steps that we go through, we're going to walk through step by step. So for this first item up here, first step is you're going to round to the nearest dollar. Okay, we don't have to round because it's already $700, so we'll put that in there. In step 2, we're trying to figure out, based off our chart here that we have, this is the one withholding allowance. So we need to figure out the number of allowances that are the dollar amount for the number of allowances in table 5 here. You can see that box right here. So let me shade some of that stuff. So we're going to put that in there, and that's based off of this table to the right. So we know that our pay frequency is going to be weekly for this person. So we look at our chart, and our one withholding allowance is going to be $80.80. And then the number of withholdings then from our person, we go back up to what we've been given for our employee. It shows that we've got one withholding. So we're going to put that number of withholding allowances in there. And then our total for step 2, you're going to take your rate from the table and multiply it by the number of withholdings that you have to come up with step 2. That's going to be your answer for step 2. And then in step 3, we're going to subtract the step 2 amount from the gross pay to find excess wages. That's what we're trying to do in this step, is come up with excess wages. So you put your, what I did here is I just did an equal sign in this amount because this is our gross pay that we have. And then the next step is going to take the amount from our step 2. So I just went and clicked on our formula to take whatever that is in the answer to step 2 and bring that down here. And then the result is going to be your gross pay less the step 2 amount. And that's going to be considered what your excess wages are. So that's the amount. If you do the calculations on here, you don't have to do any input here because it all comes from up here. So if you put those little boxes like I just showed you, you'd be fine. Okay, now here's the tricky part. So with using the withholding table, find the withholding tax. So over here on the right, you can see I took just a screenshot of some of the, from the Circular E of what the wages are. And this can get a little confusing, but what you want to do is we're looking for excess wages. This is now what we're going to deal with. And we're looking for a person that's single, that the pay frequency is weekly. So up here at the top, you can see here that this person right here is paid weekly, and we're going to use then the single side of the chart over here because this is a single paid person. So the way this works is if on this left side here is where those excess wages are. Okay, so we're going to look in this chart to find those excess wages. So we have $619.20 of excess wages. So in our chart, we're going to find $619, which is going to end up being right here in that second item. So we're going to take, and what it says is it's going to be $18.70 plus 12% of wages over $260. So that's how we figure this out. So the way I have this calculated down here, the withholding amount is the initial initial $18.70. So we put that there. And then it says plus 12%. So we put the 12% in there of excess over 260. So what I'm doing here is I'm just trying to figure out, I'm putting these items in here, and this is going to be all input from you based off of that schedule, just so we can get it all in one place. Okay, so then this calculation, you can see here that I've rounded this so we can come to 2 decimals. But what you want to do is you want to take your withholding amount, because that's going to be for everybody. It's $18.70 plus 12%. So you want to take the withholding plus anything, the wages over $260. So you take your excess wages, that's $619.20, less $260 to figure out how much is over that to come up with your percentage amount there. Okay, can you see the formula? Okay, does this make sense? Are you guys following along okay with this? And again, you don't have to do this calculation here at the bottom with the steps. I just think it's a little bit more clear to people. If you can, once you get a system set up, you just put it in here and you can work it through for each one of these items that you have. Okay, so let me grab my chat box. I'm not seeing the chat box, so I want to make sure I got you guys. Do you guys have any questions about this? I'm sure it's a little bit confusing at the moment, but we're going to go through it here in a second. So the percentage, using the percentage method, the amount to be withheld is $61.80. Okay, let's go ahead and check the wage bracket method next for this employee. And again, the circular E, let me find my circular E again. The circular E has all of the wage brackets in here as well. So you'll find them in your circular E. If you have trouble finding your circular E, let me know. But you should be able to Google it and it will show up in there without a problem. So, okay, so when we're using the wage brackets, we're going to look for the person. Let's go back to we're going to look for a single person that's paid weekly in our wage brackets. So I just made a copy of some of those items right here so we don't have to keep flipping back and forth. But you can see here, this is the wage bracket for a single person that's paid weekly. When you're doing the wage brackets, you're looking for the gross salary amount. Okay, you don't have to do all the calculations down here. You're just going to take the single one allowance, $700 and paid weekly. That's going to help you with your wage bracket. So let's look at our wage bracket for $700. So a single person that's paid weekly, you can see here a $700. Let me highlight that. Well, it didn't highlight well there. Just one second here. Let me just draw this little tiny box. Okay, so when you're doing this, you're going to look for the wages that fall within that range. So we have $700. So we know this employee is paid at least $700. So that's the one that we want to use. And then across the top, we're going to look for the number of allowances claimed. So in this case, this person had one allowance claimed. So we're going to look in this box up here and then go down to that column where it's the wages meet. And we're going to see that it's $62 is what we're going to withhold for that person. So put $62 in the box here, and you'll notice, and this is what I was talking about earlier, you'll notice how close these two items are. So if you have one of these that says $92 and one that says $62, or even if you have one that says $68 and one that has 62, go back and double check your math, because it's possible that things are a little bit out of whack of one or the other of these. So go back and double check them. They should be very close. That's how we can check ourselves. Yeah, and I want you to double check these when you're doing them. And you can go through and just look at them. You can see that these are fairly close. So we're going to go ahead and do the other ones, and you'll see that they all come up pretty close. Okay, so let's work on the next one here. Wilson is single zero. He's paid biweekly, and that's his gross amount. So let's come down here to our table, and we'll fill out our table. So we're going to round to the nearest dollar, so he's going to be $897. And then the number of allowances, we look over here, he's paid biweekly, so he's going to get paid 160, or his allowance is $161.50 per one he's claimed. He's claiming 0 allowances, so we'll put a 0 in there, and you can see our total for step 2 is going to be 0 then. Step 3 then is calculated for you because it's taking his gross wages from up here. It's taking the step 2 amount from up here to come up with our excess wages. Okay, the excess wages in this case are $897. So now we got to go over and use our table over here, and it's single biweekly. So we're going to come down to our biweekly payroll period here. You can see in table 2, and we're going to use the single side of that. And his wage $897. Did somebody have a question? Okay. Our wages, his wages in this case are $897, so it's going to fall under that second line item there. So for our withholding, we're going to say it's $37.30 plus 12% of wages that are over $519. Okay, so that's how that's going to be calculated. And you can see here $82.66 is $82.66 is the withholding. And then using the wage bracket method, we're going to go back to our single biweekly employee. So let's go over here and single biweekly person, and his wages are $897. You can see that. Remember, we're using his gross pay when we use the brackets. So $897 is what we're using. So it's going to fall right in here, and he's claiming 0. So on this first column is where we're going to use the withholding from. So you can see it's $83 in that square there. So again, you can see how close these two are. $82.66 and $83 are pretty close. So that's how I want you to just look at those and make sure you're in the ballpark. Okay, let's go ahead and we'll continue on here. So our next person is married with 2 allowances and is paid weekly. So we'll come down here and see, our 678 would be 679 when we round it. We're going to take our rate from the weekly because he's paid weekly from this table over here on the side. That's where that's coming from. Number of allowances come from our schedule up there, and there's going to be 2. Again, these are calculated. This is just taking the amount from here, and we're taking the amount from here to come up with our excess wages. That's how we're trying to figure out what our excess wages are. Okay, so then let's find our chart we're going to use. So we're going to use the weekly chart with a married person. So table 1 on the married person side. And our excess wages is $517, so we're going to find those here. That's going to be in that first square, the 517 in that first line there. It falls into that first line. So it says right there, we're going to have $0 plus 10% of any item over any dollar amount over $227. Okay, and we can see here that calculation comes up to $29.04. Okay, and then we can go over and check the wage bracket. We've got a married employee that's paid weekly, and his rate is $678. So let's go over here to our wage bracket. So we have a married employee that's paid weekly, and he's going to be $678. And he's claiming 2 allowances, correct? Yes, 2 allowances. 678. Yep. Okay. So 2 allowances is going to be 30. You can see where we come down here, you're going to look at the column where the allowances are, and you come down to where those two intersect. So that's going to be $30 for withholding. So again, you can see these are very close together. That's what we're looking for. Do you guys have any questions so far? Do you want me to stop here? And I do want to go through all of these, but see if you guys have any questions. No questions? Okay. You can see this does take a little bit of time. That's why I wanted to go through this first, because I wanted to make sure we didn't run out of time here. Okay, so 5 here has semi-monthly pay frequency is married with 4 allowances. So let's go ahead and come down here. We can round to the nearest dollar. So he's paid $18.77. Since he's paid semi-monthly, we're going to look at the chart here, and it's going to be $175 rate. And then the number of allowances he has is 4. Okay, so he's going to have his allowances are $700. So then takes his gross pay less the allowances to come up with his excess wages. No, I'm not going to put this calculation at the bottom. This is not a required method to do it. This is what I'm recommending. Michelle asked if this process was going to be on the template. It is your option to do it this way. And some people don't like this method of doing it. So I don't want people to think that that's a required way to do it. It is up to you to figure out how you want to do the calculation. I recommend setting up something like this because you can see once you get this set up, you can kind of just plug in what you need to and the numbers are calculated for you instead of trying to figure it out each time. I prefer to use our tools. We've got Excel that is a great tool for that, so I like to use it, but I'm not going to include it in there. I agree that it makes it easier. I mean, when I was working through this on my own, this is how I do it because I think that's definitely the easy way to go. Okay, so let's continue on here. So step 4, we're using the withholding table for a semi-monthly person. So we're going to use table 3, and this person's married. So we're going to use the right-hand side of table 3 here. And we have $1,177 of wages. So that's going to fall in that first box. So we've got $0 withholding plus 10% over $492. Okay, so this amount is going to be $68.50 for the withholding. And then going into our brackets then, we're going to have a semi-monthly married person. So we've got married here. Let's find our semi-monthly. I'll just drag this little square with us. And their wages are $18.77, I believe. Let's double check. Yep, we've got $18.77 in wages with 4 allowances. Okay, so $18.77, yep, falls in there. Our 4 allowances, we come down and see that our wages should be $68. Or sorry, our withholding should be $68 for this employee. And again, you can see this is very close. These are the double checks that I want you to check on, is to make sure that these two are close. Okay, next one, we've got wages of $17.90. Since this is a monthly wage earner, we're going to put $350 in here. And then we know this person is claiming 2 allowances. So we'll go ahead and put that in there. These pieces again are calculated for us. So when we get down to which table we need to use here, so we've got a monthly earner that is single. So come down here to table 4, and we're going to use the A side, the left side, table 4. Okay, and our wages are $1,090, which is going to fall into that first line there. So we're going to have $0 withholding plus 10% over $317. So that'll give us our $77.30. And then wage bracket wise, we've got a monthly earner that is single. All right, let's come down here to monthly, and her wages are $17.90. Nope, did I get that right? Monthly earner, uh-oh. I didn't copy that one over. sorry, she's single. So single monthly $17.90. There we go. So we're going to fall right in here. Single monthly, and she has 2 deductions. So we're going to follow that over to the number of allowances here, 2 allowances, and then we're going to go down to $78 here that should be withheld. Okay. All right. So let's keep going here. Weekly. This person's married with 3 deductions paid weekly. Let's go ahead and round her earnings to $539, so it's a whole number. A weekly earner has $80.80 of the 1 withholding allowance, and then she claims 3 allowances. So we'll multiply that by 3. Gross pay is taken from above, the step 2 amounts from above to calculate her excess earnings. So we're going to use our table 1 because she's a weekly earner, and the B side, the married person side, and we're going to look up $296. So she's going to fall in that first square, in that first line there, $296. So we're going to take $0 of 10% over $227, and it's going to come up to $6.96. And looking at our bracket, then we've got a married person that's paid weekly. Let's go up to our weekly group here. Married, paid weekly, and let's see, her earnings are $539. So let's find her spot here. Okay, she's going to be within those amounts there. And then she's got 3 deduction or allowances. So you go over to the 3 and you come down the column and you come down to that withholding amount of $7. You can see again, we're close on that, so that's good. Okay, we'll keep going here. Stop me if you guys have questions as we go, okay? We're going to round that. Weekly is right. This person has 6 allowances. So we're going to look for our weekly married person, so table 1 on the right. And this person now has 1138. So they're going to be in the second line there. That 1138 will fall right in there. So weekly married, yep, 1138. So we're going to take $37.30 plus 12% over $600. So it should be $101.88. All right, so let's take a look at our brackets. We've got married weekly person, married weekly person with wages that are $773. Oh, no, sorry, $1,623. Married weekly wages of $1,623. Okay, so that's right, $1,623, and has 6 allowances. So all the way over here onto 6, we come down to that matching line, and it's $101. If you guys want to do it this way with this little box so you can shade that area, all I did was when I opened the circular E, I just hit print screen and pasted it into, you can paste it into Excel here, or you can paste it into a Word document or Paint or whatever. And then you can do kind of what I'm doing here is just dragging this little shaded box around with us so you can highlight that row, because sometimes you lose track. And what these are that I have here, you notice they're not in order. I just took segments that we're going to be using for this assignment. So when you get into these big long columns here, it's hard to remember sometimes, you know, where are we in this list? So that little shaded box is going to help sometimes. So anyway, we've got 101 for withholding for this person. All right, next person, we've got biweekly, that's 773. And the number of withholdings is going to be 1 for them. And then down here, let's see, we've got a biweekly. So we've got table 2 for a married person. So we're going to go over here to the right and look for $611. That's going to be that first row. And it's going to be 0 plus 10% of excess over $454. That'll give you your... one thing I do want to make a comment. I had this happen to me in not this class, but a different class. when I'm showing you the formula here, please remember that those cell numbers may be different depending on how you set up your spreadsheet. So rather than looking at, if you copy down this formula exactly, you may not have the right cells here. I just thought of that. So when it says F29, it shows, you know, cell number F29 is going to be this amount right here that says withholding. So if you do use this, make sure you're using that cell number that equates to withholding. And then F26 is going to be the amount of excess wages. So make sure you're highlighting your excess wages column or cell. So I want to make sure that you're not using these exact cell references that I have, because they may not be in the same spot on your Excel spreadsheet. So I just thought of that. That happened in one of the other classes that I did, and I felt bad. Okay, 773, we've got a biweekly person, so 161 with 1 withholding, and we've got our biweekly person is table 2, married, and we fall within 1, and 454. Okay, just want to make sure we went through the whole process here. So 1575 is going to be our withholding. So biweekly married person making 773. Biweekly married person making 773. And this person has 1 withholding. So let's come down here to where it shows a 16 for withholding. And that's how we'll do this. Okay, and then next one, we've got, this one's going to be a little bit different for brackets, and that's why I wanted to include this one. So let's go ahead and do our percentage method. 2626, this is a semi-monthly person, so they're going to have 175. This person has 5 allowances. So we come down here, this is a semi-monthly person that's single. Semi-monthly, so we're going to use table 3. We're going to use the left side of table 3 and look for those $1,751. So that's going to fall into that second line right there. Okay, so we're going to have $40.50 plus 12% over 563. So this is, let's see, I calculated that a little bit differently earlier. So let me make sure I did this right. 2626. We have semi-monthly, it's 175, 5 deductions. Okay. Semi-monthly, semi-monthly single person. Okay, that looks right. I must have calculated it wrong the first time I did it. Okay, so we've got $183.06 here for this person. So if we go into our wage brackets, now this is where it's a little bit different for this person. So we've got a semi-monthly pay frequency and somebody that's single. So if you go into our single person with semi-monthly, you'll notice here at the bottom, it says for $2,550 and over, you have to, there's no brackets left for this person. So because of that, if they're single and you hit the end of the bracket, and what it looks like for all of these, it'll tell you at the bottom here, for this person, if you have a single person that's paid weekly, if they're paid $1,547 or over, you cannot use the brackets anymore. The brackets are only for less than 1,546 in this case, so, or 47, it's less than that. But each one of these has its own limit, and if you hit the limit on the bracket, you have to use this percentage method that we're using. So since this person is over that bracket, you're just going to go ahead and put NA in here. It's not 0, because 0 indicates that there is a 0 amount withheld using the wage bracket method, but you need to put an NA in there to designate the fact that you cannot use the wage bracket method to do the calculation here. So please be clear on the fact that don't put a 0 in there, because that indicates a 0 amount of withholding, not that it's not applicable to use wage bracket. Okay, so I wanted to make sure that I included that one in there specifically. All right, let's finish this up here with our monthly earner here with 1 withholding. So we've got a monthly person that's married, so we're going to use table 4 on the right with excess earnings of $26.50. So second line item there is going to be $161.70 plus 12% over $2,600. So we've got $167.70. And then if we use the wage bracket, we have a monthly person that's married. And we have $3,000 there. So let's monthly married person, $3,000, and she's got one withholding. So it's $169. All right. So we're close enough on that one that I'm good to go. So make sure you're double checking your items here. And like I said, they should be within a reasonable amount. There shouldn't be a huge gap, and there will be a big gap. So don't worry about whether it should be this amount or that amount, but we're fine on this piece right here. So do you guys have any questions on this piece? I wanted to make sure we had time to go through this, and please realize too, like I said, it does take time to go through these. If you guys want to go through and do, all of the percentage method first, and then do all of the wage brackets second, it's up to you how you want to go through the process. But whatever makes it easier for you, if you can set it where you can tab to a different screen to get it done, whatever's most convenient for you. But do you guys have any questions? You guys still with me after that? I know that's not very exciting, but I wanted to make sure you guys understand that process. I don't see any questions, so I'm going to go ahead and go on. Let's come back to where we were, and we're jumping past our videos. Okay, topic 2, we're talking about deductions. These, I know a lot of you guys are familiar with these because you see these on your checks. You get these options through your employer, so they're there. Generally, there are 2 different types of deductions that we have. They're voluntary and involuntary. So some of our voluntary type deductions are going to be like health insurance, disability insurance, flexible spending accounts, union dues, charitable contributions. Those are things that you choose to have taken out of your check. Sometimes union dues is a requirement for sure, but it is still considered a voluntary deduction. So these are ones that are your choice of how they're taken out of your check, and if they're taken out of your check mainly. Involuntary type deductions are, let's get back to where we were. Involuntary deductions are your withholding that comes out, your state and federal withholding. State disability, in some states there is a requirement that you pay into your state disability fund, so that is going to come out. That's not your choice whether it comes out or not. Tax liens that are put on your paycheck by the government or whoever the taxing authority is, and garnishments that come out, or child support, those types of things that are mandated that come out of your check, court ordered to come out of your check, are involuntary type deductions that come out. So there are some that you choose to have come out and some that you don't choose but are still coming out one way or another to come up to what your net pay is. And then on the other side of that, we have our pre-tax and our post-tax. Those are 2 different types of deductions that come out. A pre-tax deduction must be a part of an approved plan that your company has. That's a Section 125 plan that allows the company to take deductions pre-tax. So what this does is it deducts some of these items from your check before taxes are calculated. So it lowers your tax liability. Some examples of those are, in some cases, health insurance can be taken out through a pre-tax, HSAs, FSAs, 401ks, those types of deductions. If your company has an approved plan for this, those can be taken out pre-tax. So that allows you to reduce the liability that you're paying on taxes, because it reduces your income before the taxes are calculated on your income. So it can be really beneficial, because it really, when you take the tax savings part into that, you're not necessarily having a one-to-one, like a 401k, for example. If you're getting $100 taken out of your check for your 401k, you're getting really a little more put into your your 401k because you're not paying the taxes on that piece, because it's lowered. You figure out the difference in how much difference it is on your gross earnings, and then you can figure out what the tax differences are, and you're really getting a little bonus there. It's not $100 for $100, because your deduction is, your net pay is not going to reflect that $100 difference because you're not paying as much taxes. And then we have post-tax, which those are things that once taxes are calculated, things come out after that, like your tax liens and garnishments, federal state withholding, the state disability, like I said, in some cases, those things can come out. Well, those post-tax items are things that come out after the tax is calculated. So those would be, like I said, garnishments and liens here. Oops. The withholding and state disability are the tax items that you're going to have come out as well. So some of it comes out before the tax is calculated, some are after the tax is calculated. Okay, let's talk a little bit about outsourcing. Well, I've got a video that I wanted to show you on outsourcing. I'm going to go ahead and play this. So we're going to talk about that in our discussion this week. So I'm going to go ahead and play this for you. I think it's about a 5-minute video on outsourcing. So let's go ahead and 7 minutes out there.
So, why should you outsource your payroll?
Okay, can you guys hear that okay? Okay, thank you.
First, you need payroll accuracy. Payroll service providers have the technical expertise to accurately and consistently provide payroll in a timely manner. It's also their job to stay on top of ever-changing tax laws at the federal, state, and local level, so you don't have to. The second reason to outsource your payroll is cost of administration. Take a moment to consider this. How much time do you spend learning about taxes and changes to the tax laws? Or how much time do you think you should be spending? How much money do you spend on things like signing checks and putting them in envelopes, or making changes to employee records? Once you compare how much it costs you to do these things on your own, you will be pleasantly surprised to see how much you can save. Payday lets you get back to doing what you do best. Another reason to outsource payroll is so that you can stop worrying about payroll issues. The time you're not spending on payroll is more time you can spend focusing on growing your business. That's a win-win for both you and your customers. There are also giant penalties for mistakes. Did you know the IRS penalizes roughly 1 out of every 3 business owners for payroll errors? Doing payroll yourself might mean accidentally classifying employees and contractors incorrectly, or making deadly payroll mistakes that could put your business at risk. Don't take that chance. There's also cost management. Payroll firms operate at a high volume, so they charge much less for their services than what it would cost you to do it on your own. You also need accountability. Business owners need to make sure they are following their local and state laws when it comes to hiring and reporting wages for different types of employees, or making sure they manage vacation, overtime, and commission correctly. And CPAs recommend payroll services for their clients, especially those who have more than 50 employees or those who have high-frequency pay periods. That's because you can get everything from one place. A comprehensive suite of products and services that include HR support, accounting, and time labor management, employee background checks, pay-as-you-go workers' comp insurance, and much more. Let me introduce you to some of the unique benefits you'll find at Payday Workforce Solutions that you won't find.
I'm sorry to cut in, but I just wanted to tell you that while this is a specific company that's doing this, I wanted to show you this because this is very common for a lot of different organizations and what they provide. So this is specific to this Payday solution that we have, but there are several that will do these same types of things for you. So let me continue.
And anywhere else. Payday Workforce Solutions is a technology-driven company that keeps you up to date with the latest technology changes. We integrate all your payroll, tax, HR support, time labor management solutions, and employee background checks, so the workflow becomes much more efficient. Now, when you hire a new employee or make any changes, all that information is carried over from HRIS to the payroll system. But that's not all. You also get a dedicated payroll specialist who is personally committed to making your payroll process easy and cost-effective. Plus, our best-in-class service and innovative payroll solutions make it easy for you to manage this part of your business. HRIS systems used to be so expensive that only the largest organizations could use them. But because we work with hundreds of companies like yours, we can bring you the power of an enterprise-strength human resource information system for a fraction of the cost. That means you get a centralized database that keeps track of all your employee information, including benefits administration and all health insurance details. You also get HR services like compensation analysis and resources for managing performance reviews. It all adds up to better ways for managing and keeping track of your employee data and much more. So, in summary, HRIS makes it easy for you to track, report, and analyze employee data so you can spot important trends right away. Store confidential documents safely and securely. Better manage employee benefit enrollment periods. Your company will be up to date, and the day-to-day tracking and management of tasks will be much easier and simpler to manage. With our time labor management system, you can receive messages and track hours in real time. Let employees clock in from either a base station, their desktop, or even from a mobile device. You can capture data and streamline record keeping. And best of all, you can import all your payroll data in seconds. Payday is the smart solution for your business. We partner with industry leaders to provide a complete suite of products and services that add value.
Okay, there's a lot of opportunity for if your company chooses to outsource for what these outsourcing companies do provide. In some cases, some people hand everything over to a company and have them do everything from start to finish. I mean, as far as issuing time cards or punch cards or whatever you're going to use to collect time, putting in those time clocks. They do the data collection for those time clocks. They do reports. They do the actual processing, checks, all of that. So it really is dependent on what your company needs. In some cases, like where I used to work, we had a company that did time clocks for us. And they gave the employees each had a card that they used to punch in with. But from that point, we did the data collection and the payroll from that point on. So we only had them do a portion of it, but they also did our tax reporting for us. And, they mentioned in here, some companies will even have document retention for them. Oh yeah, there's Michelle said her company works for, or her husband works for a company that uses an app, which is another option that people have now. There's so many different types of data collection. I think we've talked about this before, of ways that you can collect the time from people now, because the digital options are out there. But it just depends on how far you want to outsource your information. And it sounds like a great option. And in a lot of cases, especially for smaller companies, it is, because they are the experts at payroll and they are up to date on the latest information that's out there, so you can make sure that you are using the appropriate rates and the laws that are out there governing payroll. The downsides can be, I think I mentioned this before, that your employees can't get answers from anybody at their work. So it's kind of frustrating to employees sometimes when they come in and if they have a question about something and you just hand them a phone number for them to call somebody. So it can be a little bit frustrating from the employee side that they can't get questions answered right away, or they don't have anybody to come and talk to. So there are some goods and bads of it. It really just depends. Just depends how much the company wants to hand out there. Are the laws different for a nonprofit? Generally, no. Tax law applies as long as there is an employee relationship there. That's really the important part of that. There are a little bit tweaks that come into play there, but for the most part, you're just employee law is generally for any employee that's considered an employee with an employer. Doesn't matter what kind of employer. Okay, let's go on quickly. We only have a few minutes here to finish up. Confidentiality. So we've talked about this before, about integrity and all of the skills you need to have as an employee working in payroll. One of the most important parts of it is confidentiality, and being able to keep the information confidential is super important. And there's lots of reasons why you need to keep that information confidential. First of all, it's you want to keep the employee's information safe from identity theft, and you all know that that's a common thing that happens now. And for companies that don't have protection on that, it's very easy for their information to be compromised to somebody that's taking social security numbers and names. There's a lot of information that's kept in the payroll records, and the thieves know where to look when they come in, because that's where the information is that they're looking for. So if it's not properly protected, they can get that information easily. Also, you want to protect your business's information. You don't want that information to get out of what you're paying everybody and how much your payroll is, and it's all sensitive information. So you definitely want to keep that stuff confidential. And finally, you keep that payroll information confidential to prevent jealousy among employees. Or really, not everybody needs to know what everybody is being paid in the organization. And there are, issues that come up when people know what those payroll amounts are and how much other people are being paid and how much overtime somebody's getting or what deduction somebody has. And even from the standpoint of keeping people's information private, there's employees that may be having garnishments taken from their checks that they don't want anybody to know about, or are embarrassed by the fact that they have a tax lien against their payroll, things like that. That's stuff that is specific to payroll that needs to be kept in payroll, and is not something that is open for review for everybody. So some ways that we keep payroll locked down, and that's why I use this lock over here, is first of all limiting access to payroll. Your payroll people technically should be in a locked office somewhere, or at least their records be kept in a locked office. Um, at the very least, they should have the information documents, actual hard documents, locked in a filing cabinet if they can't be in an office somewhere. My payroll people, I thought it was always important to have them in an office where they could lock the door, because oftentimes, even if they get up to use the bathroom, they leave stuff sitting on their desk that can be some confidential information. So somebody walking by can just take a look at, if they have a payroll change form sitting on their desk that says that this person just got a pay raise. Something as simple as that. Or even if they go to use the copy machine for a second, it doesn't take long for somebody to see information about payroll and sensitive information about the company itself. So it's important that that person is kept secure, or people are kept secure from just general public of people walking around. Definitely, with everything being digital and electronic now, passwords are important, that they're on here twice, creating strong passwords and also changing those passwords, and not leaving them out. And that was something we used to check when we did audits a lot of times, if the information for the payroll system was left out. And I can tell you, in about half of the audits we did, that we found the passwords for the payroll information that people had left either in a desk drawer or inside a folder that they used, or in one case it was taped to the monitor that the uh, person did the payroll on. So it, they always say that security's weakest link is the people, and when we were doing auditing, we saw that in a lot of cases. Michelle said, I work for a company that made us change our passwords every month, and that's really important, because you never know. I mean, there's a lot of stuff that goes on out there, and with those passwords, the more often you change them, the harder they are to break. And you can see in your own personal stuff that you have to change passwords a lot of times, but also the passwords are getting more and more complicated too. I mean, we've got to add, letters and special characters, and now they have to be, 12 digits long, and there's a lot goes to that. But the reason why you're doing that is because it makes it a lot harder to get in. And we're not talking about necessarily just for the person that's walking by and trying to hack into the computer in the office. We're talking about hackers that are hacking in from overseas or just looking for an easy in to a door. So both of those things, changing the passwords and creating strong passwords, are really important. And like I mentioned, locking up documentation, it's really a good idea to have that definitely under lock and key. And even if employees are working on it during the day, those cabinets should always be locked. Those employees can carry the keys with them, so if they need to get in, they can unlock them. But even during the day, keep those locked, because there's no reason for other people to be in those cabinets. The people that need to be in the cabinets have the keys to get in, and those keys shouldn't be readily available as well. So not something that should be just hanging on a wall in the payroll department. So it kind of defeats the purpose there. Good procedures and segregation of duties kind of work hand in hand in a payroll department. Good procedures include a lot of the things we've already talked about: limiting access to payroll, changing passwords, documentation, things like that. But also the methods that you go through as far as approval and documentation that needs to be completed to make sure that you are following the rules for the Fair Labor Standards Act, and things get proper approval. One of the important things in payroll is segregation of duties. I'm sure all of you realize that the payroll department is kind of a hotbed for fraud, because lots of money gets exchanged. Um, there's checks that are issued, a lot of opportunity there for that. And one of the things I talked about in the discussion is ghost employees. And I think you guys may have seen that in there about large companies have issues with that because not everybody knows all of the employees there. So having ghost employees on the payroll is not really that uncommon. But by segregating the duties of the payroll process, it helps to catch things like that that are going on. So segregation of duties is basically saying that you have several employees that have a little piece of the puzzle when it comes to making a transaction, in this case in payroll. So you have somebody that maybe puts a new employee into the system, and then that's all they do is enter their personal information. And then you have somebody else that puts their starting wage and tax information into the system. And then you have somebody that actually does the processing of the payroll. And then you have somebody that reviews the payroll. And then you have somebody that cuts checks and prints checks. And then you have somebody else that distributes those checks. So with all of those people involved, it's much harder for somebody to try to commit a fraud within payroll, because um, each branch is going to double check certain things as you go along. So if you are that person, let's say you were the person that did all of those steps that I just mentioned, it would be very easy to put a, um, a fake employee into the system, set them up with their personal information, with their pay records, and you could even put your own personal bank account into their direct deposit information. And then every month you could run a check for that person. And if there's no person distributing the checks, you just take the check stub out of there, and that's the end of the story. So segregation of duties is really important in the payroll department. Okay, I think that that is it that I have for this week. Do you guys have any questions? I appreciate you guys joining me this week. And just as I always say, I am around during the week. So if you guys have questions that come up about something you think about as far as material goes, or if something you see in your reading for this week, or of course with your homework assignment. And also make sure, if you do have questions with the homework assignment, first obviously go through the example we did, but you're welcome to check with me or get a hold of the Student Success Center. We've got some great tutors that would be there to help you with your homework assignment, or even your discussion post if you have questions about that. I will talk to her as soon as we get done here about the template. So hopefully we'll know by the end of the day if I can get that template in there. All right. Thanks so much for joining me, you guys. Have a great day. All right. Dante, if you still have questions, I'd be happy to answer them. If not, I'm going to go ahead and end the training or the information system here. Just want to make sure you don't have any questions because I don't want to just cut you off. Okay, I'm going to go ahead and end the meeting. If you do have questions, let me know. Have a great day.